Hey guys, it's Pilar Newman and welcome back to my YouTube channel. In this video, I'm going to share with you my top 5 best stocks to buy in May. So if you're interested in seeing some of the stocks that I have in this portfolio, as well as other portfolios that I manage, then definitely stick around until the end of the video. Now, if you want to learn about the number one tool that I personally use to choose my stocks, then I will place a link underneath this video to that one tool that I currently use. Now, if you haven't watched any of my other videos, I do share with you in one of my videos my personal strategy for how I go about picking undervalued stocks and getting these above average returns. So I will also link that at the bottom of this video. All right, guys, without any further ado, and actually with one quick stipulation, I am sharing with you these stocks that I personally choose for my portfolios. That does not mean that you have to choose these stocks for your portfolio. Please make sure to assess your level of risk prior to purchasing these stocks. This video is meant just as an educational piece and does not require you to purchase anything. All right, guys, let's get started. First on this list is JD.com. JD.com is a massive business-to-consumer Chinese e-commerce company and a major competitor to Alibaba's Tmall. Now, you may remember that Alibaba was my top pick for April and a good stock for a long-term hold. But JD.com, just as Alibaba, is experiencing a tremendous growth trajectory and is even boasting a greater growth rate than Amazon in the 3 years to 2019. In their third quarter of 2020, JD's net revenue climbed by 29% year over year. They additionally added over 100 active users to their platform compared to a year ago. JD also continues to be a forward-thinking company, especially with their more recent bullish moves to using digital currencies as salary payment to some of their employees, as well as accepting it as a form of payment on their platform. There is no doubt that e-commerce has been experiencing a boom of the century during the last 12 months, and buying into some of the most promising front runners in this industry, in my opinion, will reward shareholders quite favorably in the future. Currently, JD, Pinduoduo, and Alibaba account for almost 84% of China's retail e-commerce market and are duking it out for the top spot. Quite frankly, it's really not a bad idea to have a stake in each of these companies. But one other reason I particularly like JD.com is because they are concentrating their expansion efforts on China's smaller cities and rural areas. As a matter of fact, at the end of 2019, this expansion effort was what generated higher than expected revenue growth that surprised Wall Street that year. Now they are using AI technology to further penetrate this market. JD currently trades at $79.60 per share and is with any stock, it may fluctuate quite a bit in the short term, but I do believe that this stock will eventually climb up much higher based on its continued growth rate. Next up is Strategic Education Inc. Strategic Education is a for-profit holding company that offers a suite of online and offline educational learning programs for adults. They offer these services through various degree and non-degree schools such as Dev Mountain. Dev Mountain, for example, offers a private coding bootcamp school for adults for in-person and online learning. The stock had a brutal sell-off last year, shedding over 45% of its share price due to the uncertainty of school and university reopenings due to the 2020 health crisis. Now that schools are starting to reopen, we are seeing a gradual increase in enrollment ratio, which Strategic Education will undoubtedly benefit from in 2021 and beyond. The Strategic Education Company was also a debt-free company for many years up until about 2019, but they recently took on $142 million in debt in 2020. Its total cash did rise from $156 million in 2017 to $195 million at the end of 2020, and they as well generated healthy cash from operations of over $140 million in 2020. The fact that this company has a low debt burden and a high cash generation capacity will certainly help them ride over the current crisis. While there's still a ways to see how the educational field progresses after 2020, Strategic Education Inc. does have a strong management team in place to guide it through these changes. For that reason, I find this stock to be a great opportunity to buy in at a low risk valuation price point while there's still time to get in. A quick heads up, this next stock pick is an aggressive growth stock. Please consider your level of risk prior to investing in this company or any other company mentioned in this video. All right, so here we go. My next top stock pick is Schroeder. Schroeder is a software and drug discovery company. One of the major reasons I actually started looking into this company is because Bill Gates owns about $500 million worth of this stock. And more recently, he actually sold a lot of well-known companies in his portfolio, including Amazon, Google, and Apple, but he kept this company and even added more of this stock to his portfolio. Schrodinger's software application leads the industry in prediction accuracy in the discovery of new components that can help companies bring new medical drugs to the market much faster. If you understand the importance of what this means, then you will fully understand why Bill Gates is extremely bullish on this company. So here's the fundamental reason why this growth stock is a potential big future winner with high upside potential. Most biotech companies take many years of research and development to discover new components that lead to new effective drugs. Most of this process is heavily funded by investors like you and I. But if the process of new drug discovery takes too long, then investors grow weary and they eventually stop footing the bill to the new drug discovery. The Schrodinger software actually speeds up this process with simulations that would generally take months and years to do. Many of the major drug companies, including Johnson & Johnson, AbbVie, and Amgen, are all using the Schrodinger software, with many of them extending their contracts with the software company. As a matter of fact, customer retention rate in their most recent filing was 99% in 2020. This report also included a huge increase of additional drug companies using their software program for accelerated drug discovery. To me, this shows that companies under contract with Schrodinger are satisfied with the software. This makes this high growth stock pick one of my favorite picks for this month and as a long-term investment hold. Currently, Schrodinger trades at $77 with 11 cents per share. The international markets has recently presented a great buying opportunity for investors. One such company is Corp Ltd. Corp Ltd is the largest financial holding company in Peru and provides a full range of financial services, including commercial banking, corporate finance, brokerage services, asset management, trust, and insurance. The company, through its subsidiaries, operates in Peru. Now, Corp took a hard hit over the last year and is now presenting an attractive buying opportunity. With weak loan demand, less liquidity, political turmoil, and postponing their dividend payment in 2020, it was no surprise that investors ran from the stock. In fact, the stock is down over 45% of its value from a year ago. With all the bad news and economic pressures already priced into the stock, I believe the stock is a good long-term hold for a recovery within the next 1 to 2 years. Corp Ltd is already seeing increasing digital customer engagement, which will help to drive the stock higher in the long term. There is also a chance of Corp reinstating their dividend, which is another potential plus to look forward to. Again, if you have the patience to wait this one out, I think it will be a fruitful stock to have in your portfolio. Corp currently has a share price of $121 with 35 cents. Last but not least is DraftKings. DraftKings is an American daily fantasy sports contest and sports betting operator. The company allows users to enter daily and weekly fantasy sports related contests and win money based on individual player performances. At the beginning of March, DraftKings reported a stronger than expected earnings, despite it being a very challenging year where most people stayed at home. This really helped prove that there is a strong demand for these types of online betting services, with DraftKings revenues nearly doubling in the fourth quarter. Because of this, DraftKings raised their revenue estimates from $850 million up to $900 million to $1 billion for 2021. With the continued legalization of online sports betting across various states, DraftKings is poised to benefit from this growth as one of the top frontrunners in the field. With so many opportunities coming up in this industry, I believe DraftKings has a strong opportunity to bring massive returns to investors. DraftKings currently has a share price of $59.13. Hey guys, thank you so much for watching this video. Now, if you have missed my April stock picks, you will see that coming up on your screen, or you can check it out in the link underneath this video. Also, don't forget to check out my #1 stock tool that I use that helps me look for and find undervalued stocks. I'll also leave that link underneath this video. Thanks guys. Please hit that like button if you enjoyed this video. I'll see you again in the next one. Take care. Bye-bye.